Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. In continuation of our Q4 Outlook podcast, we continue with our series addressing key investor concerns that may help investors to navigate the current turbulent markets. Today, we look at the key question whether it's time to rotate into growth and defensive sectors. Before we dive deeper into this question, let's move back in time a bit. In our Outlook 2022, we had highlighted that strategies within equities will be important for equity allocations performance as markets transition to mid-cycle with the policy environment shifting to less accommodative. Overall, we had a preference for value and cyclical tech-tilted sectors like financials, industrials, and consumer discretionary. So far, year-to-date 2022, the performance of our preferred sectors and key equity themes, broadening value rotation, and India's investment revival have been in line with our expectations. Now, moving back to the discussion on growth and defensive sectors, since the start of 2022, growth sectors and defensive sectors which are more global economy focused have been increasingly under pressure due to multiple headwinds that ranged from 1. Rising commodity prices and prolonged supply chain disruption due to the prolonged Ukraine-Russia conflict. 2. Tightening global financial conditions given aggressive rate hikes by central banks as they fight persistent inflation. 3. Downgrade to earnings estimates amid a deteriorating global growth outlook. And 4. Elevated foreign currency volatility due to strengthening US dollar. Now, given this backdrop and relative underperformance, is it time to add exposure to these sectors? Well, in our view, persistence of the challenges just discussed are potential roadblocks for the near-term performance of growth and defensive sectors. Additionally, valuations of these sectors continue to trade at a premium to the long-term averages, leaving lower margin of safety. Nevertheless, we have closed our preference for consumer discretionary sector given its strong relative outperformance to consumer staples and stretched valuations. We further upgrade consumer staples to a preferred sector holding amid softening of raw material prices, improving demand outlook, and positive earnings revision. Overall, we now adopt a more domestic sector tilt with a blended preference for value sectors like financials and industrials and defensive sectors like consumer staples, as they remain supported by a favorable macroeconomic environment. Further, earnings estimate for the domestic focused sectors remain resilient. That's it for today. Do reach out to your relationship manager for a copy of our market outlook. And thank you as always for listening. If you like this podcast, please like and subscribe.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.